Hi, I'm Toby.
And I'm Nick.
And welcome to the Pure Property Podcast with Track Capital, where we talk about all things property and property investment. The aim of the podcast is to give you our industry insight and knowledge in bite-sized chunks to help investors to invest intelligently. And this week we've got another show where we've brought someone on within the property industry. And this week we have Liam from GetGround. Now, GetGround are a company that make it easy and cost effective to use a company, that's a limited company, to purchase buy-to-let property in the UK.
Yes, exactly. So we get a lot of investors asking us, is it worthwhile purchasing in a company name or should I do it in my personal name, etc. So it's a long decision process, and GetGround are ultimately there to help investors through that process. So today we'll have a chat with Liam, learn a bit about him personally, how GetGround operate, their business model, what their plans are for the future, and also a bit about the current market conditions and, why they're a bit different from other companies.
Excellent. So, Liam, nice to meet you. How are you doing?
Brilliant, welcome. Well, thanks so much for having me, guys. I was saying to you beforehand as well. I mean, it's I'm so used to webinars and Zoom things recently. It's quite refreshing to be on a podcast with kind of professional microphones and things like that. And so it's a pleasure to be here. Thank you very much for having me.
Excellent. So, I think just to start off, Liam, why don't you just tell us a bit about your background in general and also your role currently at GetGround?
Yeah, sure thing. So I'm you wouldn't believe it from my accent, but I'm actually a native Scouser. So I'm from up in Liverpool, which is obviously one of the hottest places to invest these days. So it's always a pleasure kind of talking investors and kind of clients through Liverpool in detail, to be fair. So I mean, my role isn't to sell property in any way, shape, or form, but it's really nice being able to, the thing you get asked a lot is, oh, I'm looking at this property here, or I'm being told to invest here. What do you know about it? And Liverpool being kind of the center of where so many people are looking these days, it's really nice to be able to kind of talk at length about that. But in terms of background, so I've been working for GetGround pretty much for the last 2 years or so. In a ridiculously rapidly scaling environment. So I think when I joined, I was employee number 7, I think it was, and we're now up to 58 by my last count. So that was just under 2 years ago now. So
Oh, wow.
I've been here for that period of time. Things have gone from kind of strength to strength. And my role kind of across that period has changed massively. So when we came in, everything was very much everybody was doing everything. Essentially, it was very, very much your kind of typical kind of fledgling startup vibe. And as we've become sort of more well developed and expanded overseas as well, my role's become a lot more defined. And so I predominantly work with the biz development team here. And do a lot of work directly with clients. So what I do is the partners that I manage, such as yourselves, I basically assist any of their clients who are interested in the route, understand what's going on in terms of limited companies. And so limited companies are such a hot topic in the property industry, but they're very misunderstood and people have a lot of questions about them and a lot of uncertainties about them. And my role is basically to smooth those out and turn tax jargon and legal jargon and all the complexities around it into really simple, palatable information so people can understand, if that's the route they want to go, and just essentially act as an educational force more than anything else.
Okay, perfect. And yeah, certainly, from my experience with GetGround, it's been really, really helpful for our investors, adding a lot of value because, as many will know, we ultimately can't give that more intricate advice. GetGround are FCA regulated and they're able to go into a bit more detail and really make sure it's the right decision for the investor. So obviously you've touched on a few bits there, Liam. It's effectively a young, aggressively growing company, obviously very tech focused as well. But maybe do you want to tell us a bit more, or if there's anything else about GetGround that you want to get across, and then maybe how they might differ from other firms out there or any competitors that you've spotted?
Yeah, sure. I mean, it's a bit of a strange one because in a way we don't have competitors, and we're fairly unique in what we do. So it's always quite a challenge to describe exactly what GetGround is and what we do to people because of that. We have a very kind of differentiated product offering, I suppose. So whereas you have, accountants purely look after accountancy, lawyers purely look after legal things. A bank account provider purely looks after setting up and creating bank accounts. We essentially bring all of those services and more together, including kind of a mortgage arm as well. So we've now got a mortgage financing division as well. And so basically trying to bring everything that would be required for the limited company route under one roof. So everything from the kind of startup education so that people can understand, what is this topic of limited companies? I mean, it can sound quite scary to people, in the first place to go off and set up their own company, especially just for a property investment. So everything from the educational side of things to the actual ongoing accountancy, the actual structuring of the investment. So we do some very high level legal structuring of the companies to make sure they're specifically tailor built for buy-to-let investing, where we set up the company's financial accounts so that they can get mortgages, which is especially pertinent for kind of investors overseas who can quite often struggle to get business accounts in the UK. And basically provide a turnkey solution to the limited company route so that people don't have to shop around to different places, that they don't have to bring 20 different services together, and also pay very highly for it. So we, because of the kind of tech that we use and the platform we've created and the scale at which we work, we can do things very, very cost effectively as well. So the typical cost of it, running a limited company per year in terms of the accountancy and the registered office and the bank accounts and the secretarial service and everything is sort of around £1,800 plus. And that number obviously increases with the more properties you have in that company. With us, we can do it very cheaply. So we do it for £20 a month. So we do it for essentially run your company for £240 a year. So that's probably where we differ most to the companies, in that everything's under one roof rather than separate individual companies for separate individual things. And to my knowledge, that there isn't as of yet anybody out there doing the same as us, and we'll capitalize on that while we can as well.
Wow. Yeah, no, that is great. And I think that's one of the things that we've really liked about GetGround and the company. And also when we've introduced people as well, straight away, just having it all under one roof just makes it so easy, especially if it's an investor's maybe first purchase or they're not too sure about the limited company route, etc. It's it kind of, I would say, makes it seem seamless, but it really, really helps to streamline anything. So I think that's great. And I think probably the next question we'd ask is, because it's something that we get asked a lot of the time, and when we're talking to investors about have they considered investing in a limited company, the first question we get back is, well, what are the main benefits of purchasing via a limited company? So in your sort of opinion and words, Liam, what would you say are the main benefits for purchasing via a limited company?
Yeah, well, without boring you too much on a Friday afternoon with tax jargon and everything else like that, there's kind of 5 principal benefits to company ownership, and the kind of way to our general viewpoint with company ownership as a whole is that a buy-to-let is a business, and even if you have one, it's still a business. Admittedly, it's a small business, but it is still a business. And companies are built for businesses. They're built to protect them. They're built to give them specific advantages that allow them to grow more than they would do outside of them. And so our general take is it's a fairly natural marriage between the two. And so the question is, well, how do you maximize those advantages? And so the kind of high-level structuring we do and everything else like that is designed to do that. And I would say there's kind of 5 principal benefits. The biggest one would be the tax efficiencies. So this is the thing that attracts most people, and understandably so, because they are very notable. And they have a very significant effect on what your actual returns on your investment are. So a lot of investors will hear, about these great yields in Liverpool, Manchester, or something, or they'll be buying something which has this great return on it, great yield, great return, everything. They get carried away with it, and it's great that they get carried away with it because they're accurate yields and everything like that. But actually, if you don't structure your investment correctly, and this is where a limited company can really come into play, if you don't structure it correctly, that yield, when it actually reaches your bank account, could be half of that, could be a third of that. The same with the returns on your investment. And so your yields and your return on investments, as far as we're concerned, aren't real until they're sat in your account, until they're sat in your personal account. And so the aim of the game is to, well, how efficiently can we get this rental income and this investment income back to ourselves in a manner that's beneficial for us. And so there's a number of significant tax efficiencies throughout the entire process. So everything from the same SDLT on purchase to the ability to deduct your mortgage interest in its entirety during ownership, the fact you're only paying corporation tax on profits rather than income tax on your whole revenue if you own in your personal name. you can very efficiently take money from the company through these tax efficiencies. So you can pay yourself dividends, or you can take direct loan payments from the company, which are not subject to income tax. You can make pension contributions into your pension account to basically mitigate corporation tax. You can sell the property via way of a share sale at the end, where you can maximize your capital gain. And you also pay significantly less capital gains tax on the sale of shares versus sale of the property directly. So there's a whole number of tax efficiencies, and it's what we probably speak most on when we're actually discussing things with your clients and others. So I won't go into the ins and outs because we'll be here all day. But the tax efficiencies are the big one. But we also take a very holistic approach to the whole limited company route. And we think it's important that people do, because people often get carried away with the tax side of things, and completely understandably. But people should pay some attention to the other elements. I mean, things like limited personal liability. I mean, this is probably one of the reasons why people have used limited companies historically. Is that limited companies basically they separate your personal assets and your business assets. So God forbid something goes wrong with your investment, and nobody ever thinks it does until you get a global pandemic that comes along, or you get a 2008 recession, or there's a hurricane or whatever it might be. Less hurricanes in the UK than maybe the US, but still, you never know. It's something that would be more realistic would be a tenant suing you, or a roof caving in and your insurance not covering it, or defaulting on a mortgage or something like that. And when you separate your business assets and your personal assets, it basically means that should something go wrong, it's very hard to come after your personal assets. So at worst, you might lose your property in your company. The company might have to go bankrupt or whatever it might be. But your personal assets, your house, your car, your family-held heirlooms assets, whatever it might be, are much more difficult to come after and lose essentially than they would be if you owned in your personal name. So that's a massive one. Using limited companies is also really useful in the sense that you can bring investors together. So having a shareholders agreement basically means that your investment, or the amount of your investment and what you're due out of it, is protected, and it's enshrined in company law. So the kind of common situation you get a lot is from people who've had divorces, and they say, God, I wish I'd done this sooner, because me and my wife had this huge divorce settlement, and I lost XYZ to her, or she lost XYZ to him, or whatever it might be. When you've basically got your assets in a company, be it with family, be it with friends, or be it with a joint venture partner, it means that should something go wrong with the investment, or you have a falling out or something like that, nobody can basically take the other person's ownership in it. So if you've got a 50% ownership in that company, or 50% shareholder, then regardless of what happens outside of that, you are still that 50% shareholder. You are due 50% of the dividends. You are due 50% of the sale profits, whatever it might be. And so that's a really handy way to do it. And it also allows people to pool their capital together. So something we're kind of being more and more aware of is, for example, younger people who don't have much capital to play around with, but 4 or 5 friends can throw 10 grand each together. They can all be, 20% shareholders in a company, get a mortgage on that property, and start, building up their property portfolio from a much younger age, rather than having to have, let's say 40 or 50 grand in terms of starting capital, which is obviously much harder to get. So that's definitely an important element. Another element that gets a lot of attention as well, and is super important, is estate planning and inheritance tax efficiencies. So essentially, when you use a limited company, you can pass on your assets, your property, to your children in a very tax efficient manner. So obviously, for those who don't know, inheritance tax in the UK can be quite a cumbersome issue to get around. Inheritance tax in the UK is very high; it's about 40%, and people, when they get to the 70s, 80s, and beyond, get very nervous, because they've got big property portfolio and they want to give it to their kids, but there's a fairly strong chance that the kids might have to sell the best part of half of this property portfolio to actually pay off their inheritance tax bill. And what you can do with a limited company is you can very efficiently transfer the property and the value of the properties via gifting the company shares to kids over time. And so what you can do is you can gift that much earlier, but as the director of that company, as a shareholder, you can maintain control of it. So you can maintain control of the income stream and pay yourself from directors' loan payments and things like that. But you also can decide what happens with the company and the properties within it, whereas the kids own the economic value. So the economic value of the property falls outside of your estate. And so should you pass away, dependent on how you've transferred it across, so there's a strong chance you can mitigate inheritance taxes. So that's certainly a very important element. And then probably the final one there would be the mortgage market. So this is something that's very misunderstood. I think there's a bit of a lag in understanding of the limited company financing market, in that a A lot of people think it's tiny, that rates are extremely high, and that it's really difficult to get financing for it, and it's not very attractive when you can. Nothing could be further from the truth. So there's currently somewhere between 500 and 600 different limited company mortgage products on the market, both for UK and international investors. Interest rates are now down to as low as 2.6%, and they're getting closer and closer to personal rates. The fact that you can deduct your entire mortgage interest from your tax bill anyway typically outweighs any slight difference that there might be between a personal name and a limited company mortgage. And it's the market's growing massively. In fact, it's growing more than anything else. So I think in 2018 or 19, if I can remember correctly, about 80% of buy-to-let mortgages were done in a limited company name. So it's very much become kind of the mainstream route that people are going down, and for good reason, essentially.
Perfect. That was really helpful, and I know I got a lot of value from that. I think sometimes when we speak to investors, it's the same scenario. I think is what we touched on earlier. Some people will have an understanding of some of the benefits, so the tax efficiency aspects. But when you actually drill down, you look through, you speak to experts, and you understand the full implications of both now during ownership and during exit, it's becoming more and more crucial to make sure you're structuring things properly.
Exactly. And what we're trying to do as well, so when we came into the market sort of 2-3 years ago, that one of the reasons we came in as well was that people were taking the limited company, but they weren't doing it as well as they should be doing it. So people were setting up these very generic companies. They were going to company's house. They were setting up these shelf companies, as it were, and they would get one or two benefits from it. And it wasn't necessarily having a negative effect on it, but the increase in value they could be having was just missed completely, and that's all down to company structuring, and that's kind of where we specialize and wanted to be able to give that to people. Very tailor-built property holding companies that maximize every advantage, and because it's crucial. I mean, these are lifelong investments. Property is not a quick investment. Okay, maybe flips are, but other than flips, you're looking to hold the property for at least sort of 8-9 years, if not, like, people hold them forever. Sometimes they just passed on year by year, generation by generation. So it's very important to get things right from the start. And I'll just sneak this in now as well. I mean, I unfortunately don't have enough time to go into every aspect of limited companies, but for anyone listening, don't hesitate to ask Tobi or Nick for an intro to me, and I'd be very happy to give you kind of a properly in-depth run through of everything as well.
Yeah, definitely. We'll make sure obviously everyone's aware of that. Okay, perfect. So other than the intricacies of setting up the company and managing it, looking more broadly, how were things going at the moment in terms of how fast paced the market is? How's 2021 going for you? What are you sort of seeing currently out there?
Yeah, it's the Wild West. It really is. I mean, there's just so many factors coming into it. I mean, the UK for the last sort of 3 or 4 years has been pretty manic in general. I mean, I think Brexit's played an initial role in things, and people trying to figure out if it's going to make prices drop or increase prices, or different Brexit dates affecting things. And then we had COVID, and then we thought we were very concerned at the start of COVID because as a relatively young company, we thought, well, this is terrifying. It's a global pandemic. How's that going to affect business? And it's actually had a tremendously positive effect on us. I mean, obviously, the whole ordeal's been awful, and it's really been a sad affair. However, it has had a positive effect on the housing market. I think that our kind of take on it is that COVID basically showed that when the world goes into panic, financial markets suffer massively. So your stocks and shares and ISAs and investments that you might have with wealth advisors and things like that, or independently, can lose 60% of their value overnight. And a company can theoretically disappear in a day. And it can you can lose vast sums of money overnight, pretty much. You can't do that with property, essentially, or at least it's very, very rare. I mean, a property, no matter what the global economy is doing, doesn't lose £50,000 of value overnight. It's a safe investment, and the UK property market especially. And when COVID kind of kicked off, we actually saw huge amounts of investment from the Far East. Now, Far East has always traditionally seen the UK as a safe place to invest in terms of property, but it kind of amped up even further because it was, right, let's pull our money out of financial markets because we're losing everything. Everything's up, down, and all over the place. Let's put it in some safe investments. And property in general is a very safe investment. It has a rental income. It has an income stream, which is, for an asset class, relatively unique. And we basically saw things take off, and things haven't stopped. And then things like the stamp duty holidays and other things like that have spurred things even further. What we found as well, so as obviously a limited company is what we do. So when the full mortgage interest deduction changes came in last year, so they were phased in over 3 years, I think it was. They were finally completely phased in last year. That basically turned everyone to its limited company route. So we're dealing with huge volumes of people, and now we're on track to be doing, I think it's 400 companies a month. We seem to be on track for. And we're scaling massively as a company, and that's with relatively little marketing as well. We've actually not done any UK-based marketing. We've done a little bit overseas, but other than that, it's been purely organic through partners such as yourselves. And so it'll be interesting to see what will actually happen when we go out to the market and things like that. And we're doing a YouTube video series at the moment and things like that to become a bit more of an educator. And so, things are really going from strength to strength. And I was saying to you guys before as well, I mean, again, kind of hot spots we're seeing people buy: Liverpool, Manchester, Newcastle, seeing relatively little in the southeast, as you would imagine. So London is becoming less and less of the go-to place. It seems to be even those very well capitalized investors that would traditionally come from the Far East and the Middle East and places like that. London's even outpricing some of those investors as well. So the majority of people seem to be looking north. Again, it's quite surreal. So we have our platform here, and every day we'll see endless companies being set up on it, and you'll be like, oh, I recognize that street. Oh, that's down the road from me, and that street's down the road from me. It's been quite unique in that respect. But it's going from strength to strength, and everybody keeps kind of waiting for this property crash. You have these kind of property gurus who say it's coming or it's not coming, or things like that. The reality is nobody knows. They really don't. Anybody who says the crash is coming or isn't coming doesn't know what they're on about, quite frankly. But because the savviest investors and the people who work in these markets and things like that don't know either. So Barry from around the corner is unlikely to know too. So
yeah, I just wanted to reiterate that it's really not encouraging, but it's good to hear that other companies in our industry. So if it's solicitors, if it's people like yourself, GetGround setting up companies, mortgage brokers, they're seeing similar trends. So I felt like at one stage we were coming on the podcast every week and saying, oh, the market's busy, it's crazy. And when you hear other people reiterate that, it really sort of sets it in stone. And when you say, the move to the northwest, the growing volume of people buying in company names, these are patterns we're consistently seeing. So it's not just one or two companies out there, either recommending the northwest or saying buying a company name. This is proper market data that we're witnessing.
No, exactly. And I think a huge driver of it is that investments in property in general, I think, scare a lot of people. But the more and more computer literate and information literate people get, and the more experience they have of going on podcasts just like this one and going on YouTube. And I mean, it's amazing the amount of people learn from property on YouTube. It's crazy. I mean, some of the people on there are really, educating half the market, as it were. And it's becoming a lot more accessible for people. And investments as a whole, I mean, even if you go back not that long ago, I mean, it was only the wealthy who invested. And in fact, that's arguably something that keeps you wealthy and keeps you non-wealthy, I suppose. But the more kind of pressure, I suppose, maybe societal pressure to, do something with your money, stop leaving it in a bank account and do something. Property's become much more appealing. It's become much more understandable. And I think as an asset class in general, it's a lot more easy to get to grips with in terms of it's. I mean, if you look at a stock or a share and you try and understand company dynamics and what determines the market value of a company and therefore the value of your stocks and shares, it seems very complex. Whereas if you look at a property, you say, that is a property in a nice area, I could rent that out to somebody and I could get rental income. That's the basis of property. And I think that's much more appealing to people. And so the more people who are getting into investing, they're actually going to property first because they see it as a more... It's more of what they know, essentially. They've lived in a home, they've paid rent, they have a mortgage, whatever it might be, so they get the underlying dynamics.
Yeah, I think that's a good point. And I think property as well, it's compared to other investments like you mentioned, sort of stocks and shares, etc. It does, in some sense, have an essence of predictability to it, just because of how the market does react and how the trends are. Because, and again, it's a slightly safer option because even if you did buy at the height of the market, which would technically be perceived as the worst time, as long as you're not overexposing yourself, as long as you're in it for sort of the medium to long term, you know it's going to bounce back, and it tends to bounce back higher, and you'll always do well in the long run as well. So as long as you're going in with that mind frame and doing it securely and safely, it's got that element of sort of security and predictability. Well, I suppose they say, as they say, safe as houses.
Well, no, exactly, and but that is completely true. And I mean, I speak to endless investors because of the nature of my job, and it's relatively rare I ever hear about somebody's property decreasing in value. So it might stagnate a bit, it might not rise massively, but it's relatively rare. And to be fair, the only times I really hear it decreasing in value is when there's things like a cladding issue. So obviously post Grenfell, there was huge regulatory changes around cladding and things like that. So people who had apartments that had that on, obviously they're downvalued massively. But other than that, I really don't know of many. And again, if it does take a dip, and these things do because it's the natural cycle of financial markets or property markets or whatever it might be. If you just hang in there for a few years, it bounces back up, and in that meantime, you're still making rental income from it. So it's as an asset class, I think it's a very, very impressive one.
Yeah, I do like those people that are always waiting for the crash, and they've got their cash stored up because they're any minute now, any day now, the crash is going to come. I had it. I always tell Nick and a lot of people. I had it when it was Brexit. I remember when Brexit was first announced. I had investors. I can't buy now. I'm waiting for it to crash. And you look at where we are now. I think if you didn't spend the money then or very soon, you're probably sitting there thinking, I wish I'd bought them. But
exactly. It's the old saying, isn't it? The old saying, best time to plant a tree was yesterday. The next best time to plant a tree is today. And you have these people, and I've now been here for a year and a half, 2 years now. I can remember clients I started speaking to a year and a half ago who are like, I'll just delay it. And every couple of months I follow up with them to see how they're getting on. And they just say, I'm just waiting. You think if you'd invested a year ago and even just if you bought an off plan a year and a half ago and then sold it before it was even completed, your capital gain anyway would have been fantastic. So it's quite bizarre, people's approach to it.
No, I mean, so you've already mentioned about the benefits of investing and using a limited company. So what would you say, sort of briefly, are the main benefits of using GetGround?
Yeah, I think it's threefold. I think the issues we were trying to solve in the market, well, we're trying to solve a lot of issues, but we're trying to make the property market, both in the UK and eventually globally, much more efficient to basically allow access to a lot more people. And three of the issues originally that were affecting the limited company kind of approach in the UK was education, hassle, and cost. So people just didn't understand the limited company route. How do I do this? Should I do it? Is it right for me? Okay, I'm going to do it. How do I do it properly? So I said before, you can just set up a generic company on Companies House, and sure, it might give you one or two advantages, but if you want to access everything and make your company as tax efficient as possible, make sure it protects you, make sure you can get the best financing, make sure you pass it on, whatever it might be. You've got to do things very specifically. And so because we're so sort of committed to education rather than anything else, so we're not so much trying to sell anything, as it were. We're trying to bring people up to speed with things and help them figure out what's best for them. And if they don't want to go that route or they don't think it's pertinent for them, that's completely fine. We will send them away. And we've sent many people away before.
You sent some of ours away, I remember.
Exactly, yeah. We said, maybe this isn't for you, actually. Maybe you should consider this. And maybe after you've done this first property, maybe it's for you or something like that. And so it's that educational component and allowing people to sit down with basically a consultant and go through things bit by bit, allow them to ask even the simplest of questions. And questions they think might sound stupid or whatever it might be, and just try and turn that complex jargon into really palatable information. Because whilst YouTube and all the other sort of forums online are great, they still don't give the full picture. In fact, the reason we're doing our YouTube series is because the limited company information that's out there at the moment is completely substandard. It doesn't go into any detail really about what the advantages are, how to access them, etc. And so I think that's the first part. And again, all those consultations are free, and we'll be putting out more and more content, and we'll give a lot of that content to you guys as well, to give out to any of your clients as well. But being an educational resource, first of all, is what we are. So unlike maybe your typical tax advisor or an accountant who might charge you £400 just for a consultation to tell you the bare basics, we don't. Essentially, we can have as many chats and consultations with you as need. Beyond that, I said hassle and cost. So because we're first and foremost a property technology company, the platform we've created to allow people to take the limited company route is extremely efficient. So We're part funded by the UK government through HM Land Registry and a number of sort of private venture capital firms. And that's basically allowed us to integrate our technology directly with Companies House API, directly with HMRC's API. And so we can do things at speed, first of all. So instead of going back and forth with accountants and lawyers and everything else, get shareholders agreements and director loan notes sorted and things like that for weeks on end. It takes you 20 minutes on the platform, and it takes us about 24 hours to actually create your company and web file at the Company's House and have it completely incorporated. We also look after all the ongoing management of that company, so you don't need an accountant chasing you for 30 different things and secretarial services for this, that, and the other. You don't need a registered office, everything else like that. It's all under one roof. So the entire financial administration of your company is looked after under one roof. I think the third element would be the pricing. So again, we're considerably more cost effective than anybody else in the market, but by a long way. So £20 a month versus £1,800 plus per year to run your limited company is. I think most people would argue that's a pretty competitive price for everything under one roof. So again, helping people understand things better, help people reduce the hassle, and because that's one of the things that puts people off property as well. As much as it seems more easy to get into it, it seems like a hassle. So I've got to look after this property. What happens if the tenants don't pay? What happens with this? What happens with that? We're trying to reduce that hassle even further and take on as much of that as we can, and then obviously reduce people's associated costs. So one of the things that puts a lot of people off it for maybe their first investment or maybe even their first two investments is to say, well, hang about, if best part of $2,000 of my rental profits per year are going on accountancy fees and stuff, well, suddenly my yield goes from this to this, and it's a lot of money to lose just for somebody to look after your company, whereas £20 a month changes things a lot less. So that would be kind of the benefits of using us.
Yeah, I think it is, a real game changer, and it's exactly what you mentioned. Is that educational aspect, isn't it? Letting people know, look, there is a route to do it effectively, both time wise and financially. So, and just going back to that sort of educational aspect, when you're speaking to investors, would you have like a demographic of investor, or maybe is it people starting out that want to get some advice all the time, or do you also get more of the sophisticated end and landlords with big portfolios? Where do you guys sit in terms of your customer?
It's really quite variable. So the most overt one is obviously people who are relatively new to property, because the main channels so I said before, we haven't done any marketing yet because we haven't actually felt the need to. We were quite, our model was working as it went. So we do a lot of work through companies like yourselves, and through mortgage brokers, lawyers, accountants, tax advisors, whoever it might be, and they basically refer clients to us, and we educate them. Because they're going to the likes of those providers first off, often they're relatively new investors, or at least relatively new to the UK. But I would say the most common demographic is actually people who have one or two properties already. I would actually say that's probably the most one. You're more sophisticated investors, so you kind of 10 plus properties and have been in the game for a long time. Less so, even though we can definitely be a benefit to them. A lot of them have structures already set up, and they're quite set in their ways, and that they're often, quite a bit older, and that they're less kind of keen to explore other options and
long-term relationships in place already. Things
essentially, and even though their accountant around the corner is ripping them off or whatever, it's still Barry down the pub to them, and they love that, and that's fair enough. But it is a market we're breaking into more and more. But I would say your new investors and your investors with kind of one or two properties that are the most common we deal with. In terms of demographics of locations around the world, I think that's quite an interesting one. So we're getting closer to the 50-50 mark in terms of where our investors are coming from. So sort of 50% UK and 50% overseas. And something we're acutely aware of is overseas investors who have a lot of capital are always aware of the UK being an easy place to, not an easy place to invest in, an attractive place to invest in, but they don't realize that they can. They think they have to make cash purchases or things like that, or that they can't take the limited company route because they need a company bank account and they can't get one because they're based overseas or whatever it might be. And our solution kind of changes that essentially. So we have our own relationships direct to lenders as well in terms of limited company financing. So we can basically arrange financing for international and residents very easy. And then we also have partnerships with brokers as well who can refer them to. But the reality is it's really not as much of a challenge getting financing as an international investor, especially through a limited company. So the rates are pretty much the same for personal and limited company. But the actual process And the ease of getting a mortgage for an international resident is actually typically easier in the limited company route. And there's a wealth of options out there. And I think a lot of people just don't realize that they exist, essentially. So we've got investors from all over the place. I mean, we have an office in Hong Kong. We have an office in Singapore. It's very likely that in the next few years, we might open one in the Middle East. We might open one in Africa, because we see a lot of traffic out there as well. And so demographic-wise, it's probably 50-50 UK and internationals. And again, generally speaking, sort of relatively new investors, but also those with kind of 1, 2, 3 properties already. And even some more sophisticated investors, as I said, because the issue is a lot of people bought 4, 5, 6 properties, 6, 7 years ago, before the limited company route became a big thing. And they've got another big chunk of money now, and they're looking to get back in, and they're thinking, how do I actually structure this? And so that's been quite a common route.
No, especially with all the regulation changing frequently, like if they bought at that time as Section 24 coming in, etc. It's constant change. Well,
precisely. Changing. I mean, half the landlords who bought around that time or bought earlier than that have sold up because it's become completely unprofitable for them to have as an investment, so that they've just abandoned their portfolios basically, which is a shame. So.
Yeah, only stressing obviously the importance of structure and setup, etc. Even more on that side
precisely,
of things.
etc. Yeah, so it's again, these are long-term investments, and the annoying thing is if you don't get it right at the start, it's usually very hard to take that route in the future. So, for example, the most common question we have is, "Hey, I've got 3 properties in my personal name. You guys look great. The complete route makes sense to me. How do I transfer them across?" And we can facilitate that very easily, and you can transfer them across. The issue is it can be very costly. So HMRC basically views the transfer of an asset from your personal name to a limited company as they treat it as a sale, essentially. And so it incurs stamp duty, land tax, and capital gains tax, generally speaking. There are rare circumstances where you can avoid one or both of those, but generally speaking, that's what you pay. And if you've got, if you bought a property in 2000, it's now 2021. It's not unfathomable that you'll have £100,000 of capital gain on your property, especially in London, and so then you've got to pay capital gains tax on that, and then the stamp duty, and that's purely just to transfer it across to yourself, essentially. So it's structure really does matter.
Yeah, definitely. No, that's great. So the question next would be, sort of simply for the listeners, what would be the process of using GetGround?
Yeah, so it's super simple. So, I mean, if you guys came through Track Capital, so if you were dealing with Nick or Tobi or somebody else, you would typically get referred over to us if you're interested. In the same with lots of our partners already, so that they're either interested in the company route or the consultant thinks that it could be a beneficial route for them. We'll then have a chat with the investor and help them understand all the nooks and crannies of it, bring them up to speed on everything. And if they're keen to proceed, it's really just a 20-minute process on the GetGround platform. So they'll log in, they'll upload a picture of their passport, a picture of their proof of address. They'll take a selfie so that we can do facial recognition. And then they'll put in a couple of details about the property, and then that's everything done on their side. And then we go off and do the legwork. We structure the company, we set it up, we set up the company account, and then all they would actually have to do was just log in and sign their company's legal documents that we created for them. And after that, everything's done. They can exchange in the name of the company, or they can complete in the name of the company, whatever it might be. And then we manage everything from then onwards. So in terms of the actual workload the investment have to do across the year, I mean, you're talking less than an hour across the year. I mean, maybe upload a few receipts to their GetGround platform, if they bought some furniture for the property or something like that, whatever it might be. They might have to log in and set up a standing order for dividends to come into their account. We have our own currency exchange services built in as well, so they might want to do a monthly dividend payment from the UK, their UK business account to their account in Saudi Arabia, wherever it might be, or in the UK, and whatever may be the situation. But other than that, it's really as simple as that.
Cool. And I think that's a really good point that you mentioned there when you relate it to just doing an hour of admin a year. I think when you say that, people, they relate to it, they understand, oh, okay, that's easy then, I can do that. When you say, oh, you've got to do a bit of admin, etc., it's a bit more vague. So yeah, it's an interesting point that I don't actually always relay to investors. So yeah, I'll have to pick that one up.
It's really minimal. I mean, we're trying to take as much of the process away from the investor as possible and just let them have as hands-off. I mean, I'm sure you guys have this a lot with clients that come to you. People want hands-off investments, and they get promised that, and it might be in terms of the actual purchase and ownership, but when you bring in all the other elements in terms of, you've got to file accounts now, and you've got to do this, you've got to do that, and it
soon
really
adds up.
And then if you've got a family, you've got a job and everything, they actually become huge tasks, but when you don't have much time. So it's, definitely something that's helpful.
Cool. And I think I don't think I really need to ask this one because I think we've touched on it already, but we were just going to reiterate what would be the sort of alternative process or the alternative options to not using GetGround. And ultimately that would be, using a more expensive accountant, spending a bit more time explaining, et cetera, et cetera.
Yeah,
So
the issue you would have is not just the expense. You might not even get the right advice. So accountants aren't ubiquitous. There isn't just one type of accountant. There are many types, but there are many general accountants. So a lot of people go to a general accountant, get the company set up or anything, but then they're not property specialists. They're not structuring things from a vast understanding of property sphere and how to make them super tax efficient, etc. And so in terms of the actual quality of what you're getting, it might also not be that great in the first place. But the issue is you wouldn't just go to one person. So for shareholders agreement and directors loan agreements and an understanding of transfer pricing regulations to make sure you have the optimal interest rate on your director's loan, you would have to go to a lawyer, and the lawyer would charge you a lot of money for that, like a lot. For the actual company structuring and setup, you go to an accountant, and they would obviously charge for that, and then charge you to actually keep it going. You would have to go to a bank account provider and try and get a bank account, which are a nightmare for UK residents for a business account, and even more so for an international. So there are very, very few options for international investors in terms of business accounts. We have a very unique system where we actually have one built directly into our platform, and that's why we can give people based overseas and within the UK an account very, very easily with no hassle to themselves. But you'd have to do that, and then you'd have to get secretarial services, so you'd have to get registered office service. And so it's just a hassle. You're pulling together kind of 4 or 5 different services into kind of one pot and trying to coordinate between them and get everything right. Make sure you're getting it right in terms of the actual advice and the structuring, and then obviously the costing on top of that. So that would be the alternatives, I suppose.
Sounds like a headache and very expensive.
It is, yeah. It is.
And so purchasing via a limited company with everything that's gone on in the property market, going on in the property market, all the taxation changes, etc., would you say that purchasing via a limited company is here to stay for the long term?
Obviously, it's in my interest to say yes, but even trying to stand as an unbiased kind of observer, yes, and for 2 reasons. First of all, the government's in favour of this. This isn't some kind of tax gimmick or anything else like this. The government's trying to improve transparency in the market. So one of the big issues that has kind of been sort of fairly common in the buy-to-let market in years gone by is there's actually been an immense amount of tax evasion. So smaller landlords simply not declaring income, bigger landlords using kind of very murky offshore companies to funnel profits out of the UK, things like that. And so kind of pretty substantial holes in government revenues from what they would get from kind of the property market. And limited companies are extremely transparent. They're onshore based, they're UK based. They have no kind of layers of kind of opacity to them. That they have audited documents on there. They have legal documents. They have audited accounts. It's public information. There are requirements to keep them updated. You have legal requirements as a company director to make sure you have your accounts filed and everything else like that. And so it professionalizes the buy-to-let market, which is what the government's very keen to do. And something that they've put a lot of effort into. And the kind of second kind of point to that is one of the common questions that you get from the more novice investor is, God, this sounds too good to be true. Like, are you sure you guys are legit? Are you sure you guys aren't lying to us? Like, this is all legal, right? And the government have given us quite a bit of funding. Is the proof in the pudding there? I mean, they wouldn't do that if they didn't think our kind of model was appropriate, as it were. And so we've had funding from HM Land Registry. We've had a lot of support from kind of other areas as well. Obviously by other venture capital firms as well. So some pretty global venture capital firms. And we've just recently had a round of funding a few months back from QED Investors as well, who are a huge American venture capital company. There's a lot of impetus behind this, and there's a lot of impetus to get it right. And we have a very stringent legal and compliance team to make sure that everything we do is completely in line with kind of government regulations and UK company law and UK common law, etc. But it's yeah, it's here to stay. I mean, if you look at what's quite interesting is if you look at markets in Hong Kong, so it's the Hong Kong property market is very limited company centric. And lots of properties are actually traded that way. So the sale of properties by way of shares and things like that. It's a very efficient market, and it's in favour not just of the government but markets in general. And so, whilst you have governments that care about kind of free and efficient markets, it'll definitely be around.
Good stuff. Yeah, it's really, really exciting company, GetGround, I think, not just in what you do, but, the whole story of it as well. So, I mean, the only other thing I'd reiterate to investors is that we've been working with GetGround for a while now, me, Toby, and the team, and we've introduced multiple people who, have followed through and purchased in companies, and it has been all positive, both in terms of the service and the knowledge and value passed on from Liam and the team, but also obviously the benefits that we've spoken about previously as well. So I'd encourage anyone, if you're thinking of purchasing either now or in the near future, if you drop us an email, info@trackcapital.co.uk, just mention you've listened to the podcast, etc., and we'll put you in touch directly with Liam. It'll be him that will handle it himself, and he'll speak you through, make sure you're familiar with everything, and give you a really good start in structuring your portfolio correctly. But just to finish off then, Liam, do you just want to give us a couple of sentences, just very briefly summarize, GetGround and ultimately why someone might want to use them?
Yeah, sure thing. So we're essentially the turnkey solution for structuring your property correctly and your property portfolio correctly. So everything's under one roof, everything from the education around kind of what might be best for you, help you understand all the complexities and the tax jargon and everything else like that. And then we're also the turnkey solution in terms of actually taking that route. So everything's under one roof, everything's super hassle-free, it's very cost-effective. We have over 4,000 investors on the platform globally now, and that's just after a year and a half of being live. So by the end of next year, we'll be at least double that. And we're trying to remove the traditional barriers to people taking the limited company route, make things easy for the investor, and do it very cost effectively as well. And that's what we're here to do.
That's great. I think this episode has been really sort of insightful, and I'm sure it's going to be eye-opening for a lot of investors. And yeah, as Nick mentioned, it's definitely worth having the conversation with GetGround just to see if they would be able to benefit your sort of next property investment purchase, which I'm sure it will. But it's been really insightful. And I mean, usually we send out sort of information and some initial sort of material to investors when we speak to them about GetGround. But I'm pretty sure I'm going to start giving them the link to this podcast episode, because I think it's going to be even better for them to sort of hear it from yourself and listen to it, because it's definitely sort of great to hear, to understand, and as Nick said, it's exciting a company as well, but also what you can do for an investor. I think is really exciting and definitely beneficial. So that's been great. Thanks for coming on, Liam. We really appreciate that. Thank you very much
for having me, guys. I massively appreciate it, and look forward to working with yourselves and whoever's listening more.
That's excellent. Well, that's all we have for you this week then. So, Liam, thanks for joining us. And we will see you next time. Goodbye.
Cheers, guys.
Thanks, everyone. Bye-bye.